housing sales volume has continued to fall. Honestly, would really, really help the housing industry moving forward. That's true, but that's kind of the point. Like all of these things had a lot to do with that volatility that was created along the way. The more interesting part is maybe looking at rent price growth. Should immigration levels be adjusted based on housing supply capacity? This is something that I think we're going to be dealing with for a little bit, but probably not forever. Like I think a lot of the demand's just kind of been destroyed, not destroyed, but like really suppressed. Like where things started to get a little bit more divided between Canadians. In New Zealand, it was 5.5%. In Canada, it was 52%. They both anticipate a pretty bad recession in Canada. I just think that's funny to see the flip flop from both sides. That projected federal debt levels as a percentage of GDP over time. Canada has the highest household debt levels as a share of GDP. So this is probably the most interesting thing that I've observed in the Bank of Canada's most recent monetary policy report.
Thank you so much for joining us. This is our third Market Watch call, and we've got the results of that poll that we were just chatting about to share. Everyone knows Dan. He is one of our very valued columnists who contributes twice a month and then some. And he's the chief real estate officer of Valerie. And I said to him, I think after our last call, that he does a really good job of explaining why realtors should care about the things that he speaks about. So with that, I'll throw it over to you, Dan. And if you have questions at any time, please just pop them in the chat and I'll flag them for him.
Amazing. Yeah, let me just get my slideshow going and then we'll fire it up. Okay. All right. So the big topic today, highly predictable, obviously heading into the election, is policy rather than just politics. We're going to do a little bit of results of the polls, but also just thinking about. I kind of had to rush to go through Pierre's costed plan, which came out like a couple of hours ago. But there, I think that the general thing that I have here, my perspective is very similar to last time that we had this call, was that Canada actually has two pretty solid candidates running to lead our country after. We're in a very fortunate position as a democracy. I'll get that out of the way and kind of offend everybody right off the bat. And I think that the outcome is going to be very close. The part that has really interested me, and I'm going to talk a lot about this, is that I won't say that like the Overton window has shifted, but I think that Canadian voters have shifted right from where they were in the past couple of elections. And there's an economic reason for that, and I'll kind of explain it. And then we'll talk a little bit about sort of things that you need to think about as a real estate professional to advise your clients. Because I'm not going to see you for a month, and there will be an election next week. And, I mean, it's going to be a lot of guesswork based on what happens at the election as to should we buy a house within the first 3 weeks of a presidency before I hear from Dan again next week. We're going to talk about that a little bit today. So I'm going to talk very little about the real estate market and stats outside of basically just this chart, which is that housing sales volume has continued to fall, and at a national level. Some markets are strong, some markets are weak. Usually the ones where there's less risk seem to be doing strong because people aren't really all that worried about the uncertainty. The markets where there is a lot of risk, where you've got high house prices, you need a lot of debt to buy a house, they seem to be suffering more. People are really just putting a pause in their search decisions, which makes sense because we've got an ongoing trade war and an ongoing election. And I personally am not making any decisions until after those things seem a little bit more clear. At least like there's a path, and it seems like most consumers are taking that approach. Federal polling, I've gotten kind of mixed. So this is Main Street, which is kind of the most favorable to one side. Then you've got Ledger, which is kind of most favorable to the other side. Some people say that polls are fake. Some people say that they're wrong. We're going to have to wait till the election day to determine it. That's kind of all that I'll say in that regard. What I will say is that, historically, you've seen this gradual downtrend in both your Liberal Party, which was your center right, and then your center, and then your Conservative Party, which is kind of your center right. and uptrends in some of these kind of challenger parties, especially the NDP. A lot of the gains that we've seen from the Liberal Party is from people leaving or is coming as a loss from the NDP and a little bit from the Bloc as well. This is interesting because again, like people globally interpret Canada as like one of the most left countries, and you're seeing people moving from a left or from the left to a centrist voting bloc. Is it because they want to support the Liberal Party against the Conservative Party to ensure a win? I don't know. But it's interesting, and it's more interesting when you kind of think about it in terms of like the shift that we're seeing in within the Liberal Party, right? That tells me a little bit more about something called the political business cycle. But before we get to that, I'm going to do some of the results of the poll because a lot of these actually surprised me, to be honest. So this one, it didn't really surprise me based on like the polling that I've done kind of with my audience and what I've seen in the industry that, the majority of people in the real estate industry um, feel that Pierre Poilievre would actually be better for the real estate industry in Canada. I'm going to say that I actually disagree with this. I think that the Liberal platform had been, and it's not to say politics, like, but the Liberal platform historically, a lot of immigration, a lot of red tape, so that's reduced demand, increased supply. That now, I guess it's an interpretation of the question because that caused house prices to rise quite a bit. But house prices rising, as we know now, means people can't afford houses, which means they don't buy them. So that's not necessarily good for the real estate industry per se. So that's likely how we arrived at the result that we have here. Um, which party's housing plan appeals to you most? This is the interesting one, right? Build the majority,
Can jump in
34%.
jump in on this one, Dan. Sorry, I did send you an updated slide.
Oh,
This,
did you?
yeah, no, because we added
Mm,
the capital gains deferral tax deferral to the Conservatives line would
got it.
reset the answers. So
Okay.
this is 265 in favor of the Conservatives plan.
Okay, so it was slightly higher than
Slightly higher.
okay. Still makes sense. I think they're two decent plans. And yeah, so just ignore the visual. But so I think that the capital gains deferral piece is among the most interesting from my perspective. The fascinating part is that you get Carney kind of borrowing from old Canada with the MERB program, which is like a really aggressive tax program for rich people. Basically, like if you're a doctor or a lawyer, you can actually tax deduct depreciation of your apartment building off of your personal income. If and similar, the Conservatives were borrowing a real estate tax plan from the US, where if you sell an asset and realize a capital gain, you could roll it into a new asset, and that would allow you to port the capital gain from one to the other, so you don't pay capital gains until the very end. Um, and the way they'd phrased it is if you invested in anything in Canada, which you could see a lot of boomers potentially use that to sell their property and then put it all into stocks or something like that. Um, which housing issues would be the top federal priorities? Reducing development fees and red tape. Agree, and I guess that this is why people believe that that this is or that Pierre's solutions would be best for the real estate industry. It would bring us supply to sell, to transact. It would probably help improve housing affordability. His does seem to be really focused on those first two. Nobody really talked about the immigration side in their platform, which surprised me. I think Pierre kind of had a unique opportunity there, but I think the Liberals did kind of like scale that back on paper in the last couple of years, and we're starting to see the impacts of changes in population growth, and so maybe he just felt like it wasn't a big enough of an opportunity to include in the platform, but there is a mention of that in the quiz, and the realtor perspective on it fascinated me actually. Reducing interest rates and mortgage qualification stress test was the highest issue of importance for real estate professionals. And this one, I have some good news for you. Maybe it didn't make it in here. Um, I wonder if it did. Anyway, we did an article about OSFI's potential removal of the stress test, which is now they're halfway through their test period on this 450% ratio that they have for the banks, where basically um, the stress test could actually happen on the bank side rather than the individual side, which would mean that they would remove, probably not fully remove, but maybe reduce the stress test rate for consumers, which I believe honestly would really, really help the housing industry moving forward. I don't think it'll help real affordability, but it will help perceived affordability because your buying power goes up if your interest rate that you're qualifying at goes down. So people can buy more house, so they can qualify for bigger mortgages. It could potentially make true housing affordability worse, but on a buyer level, your buying power could actually increase. Um, and I'll direct you to the article. I think it's in here, but if not, I'll find it and put it in the links whenever I have a minute. The A lot of people feel that increasing buyer support, such as tax credits or longer amortizations, would be the best thing to improve housing affordability. I actually don't agree with this, but it was interesting to see that the market does. I guess that you're thinking of housing affordability in terms of first-time buyers, giving them a leg up does help. The challenge is they're 50% of the market according to the Bank of Canada, so giving them a leg up pushes the mark, like it gives 50% of the market a leg up, and that can often become inflationary. So that's a challenge. Which leader do you think would most likely cause house prices to rise? Mark Carney was 38% of the vote. I mean, it was relatively close here. I think that I would agree with this. I think that they're more likely to uh, their spending is a bit higher, and it's actually not massively higher. I think like their deficit was 130 billion, peers was like 110. So, but a lot of their spending is on infrastructure. Um, Infrastructure can help grow communities, house prices, etc. But also I think the bigger one is we've seen sort of a liberal track record on spending, but also on immigration or population growth through non-permanent residents, etc. I would expect that that could continue, and that seemed to have a more pronounced effect on house prices than the government spending side did. The one thing that I think not a lot of people are considering is that should either of these folks have to spend a lot, that could become inflationary, and that could cause interest rates to not come down as much as we need to, or have to come back up later. And so that's probably like the one thing that's really worth thinking about as a long-term policy challenge. I've already seen so many professionals saying both parties are proposing to spend a bunch of money that's going to push house prices up, but really like the most directly correlated thing that we've seen in Canada's economy with house prices and housing demand is interest rates. And we've already seen Tiff Macklem push back against the Liberal Party spending in the past, maybe not him specifically, but the Bank of Canada's analysis team in the past couple of monetary policy reports. I have included a couple of charts from the most recent one in here, but basically, government excess government spending is inflationary, and that can cause interest rates to have to stay higher for longer. So that's probably the real way to think about the amount of deficits that are being proposed right now versus versus house prices in the long term. The interesting thing, this is a liberal pundit from Twitter, but the interesting thing is if you look back at the past two prime ministries, you can see house price growth under the last two. A lot of people say, "Oh, house prices were lower at the beginning of Harper, and so the percentage is higher." And uh, that's true, but that's kind of the point. Like magnitude is or growth is relative. So yeah, under Harper, maybe they went up $300,000, and under Trudeau, maybe went up $300,000 as well. But it is a bigger percentage. The interesting part, I think, is actually if you look at what the path looked like of those two things. So I mean, uh, in I guess this was your peak, kind of Q1 2022. We saw that huge peak. So I would say that house prices saw a lot more volatility under the Liberal Party than the only dip we really saw during the Harper years was that kind of '08 moment where you saw house prices dip, whereas in since the beginning of the Liberal Party rule. Since then, we saw you saw you saw 2016 volatility in Vancouver, followed by the non-resident speculation tax. A lot of that capital moved to Toronto. Then they put in their non-resident speculation tax, so a foreign buyer tax basically. Prices dropped in both of those markets thereafter, and then you saw that capital just start moving around the country until we saw the national foreign buyer. Well, then we saw this huge run up during COVID, helicopter money, and that wasn't all their fault, right? That was like the Bank of Canada dropped rates massively, but they did do a lot of spending. There was helicopter money, there was stimulus, etc. All of these things contribute to the volatility, right? There's like even lockdowns. You could say, well, a bunch of people thought the offices were done for, and so they just moved from the 416 to the 905 or whatever. All of these things had a lot to do with that volatility that was created along the way during the Trudeau era. The more interesting part is maybe looking at rent price growth. And this is really where you can actually see like they were kind of similar. And then this is really where we got, I think, carried away with non-permanent residents population growth in Canada when they really felt that that was a way to backfill a lot of the economic growth that we missed during the COVID period, and rents kind of just went nuts after that. And that's the Bank of Canada who were really the first one to observe that there was a huge correlation between population growth and rent growth. On that note, this brings us to the question that fascinated me the most, which is should immigration levels be adjusted based on housing supply capacity? And an overwhelming, almost 76% of respondents felt that the answer to that was yes. Um, and I've always been a bit cynical, and like at the risk of offending some people on the call, I always thought realtors wanted house prices to go up. But I think what I've determined from reading this survey is that realtors realize that high house prices are actually a problem for our industry. And that the people that I hear cheering on, no, house prices only go up, or maybe not, that maybe that's a small segment of the market, and maybe not, not the right people to be thinking about. And most agents want um, affordable houses for people to be able to buy so that we can transact, not just for us, but I mean, it's good for the country that people can be able to afford to buy their houses. So um, this one was interesting from my perspective. Um, the the this is nice to see that most people are somewhat confident in the outlook for Canada's housing market over the next 2 years, but that the smallest group of people were very confident. So we didn't see a lot of people who were very confident. So there was, most people are like kind of in the middle or somewhat confident or somewhat pessimistic. But nobody's really like super bullish on the market in the real estate perspective or in the real estate industry. Um, this one kind of go back to the original chart where I think market uncertainty is obviously the biggest challenge. And I think you kind of couple that with the consumer confidence piece. So those, if you group those two together, it's the majority of responses. Um, this is something that I think we're going to be dealing with for a little bit, but probably not forever. I think at a certain point, people will probably just get bored of tariffs and stuff like and trade war and stuff like that, and just say, okay, it's just going to be like this for 4 years and whatever. And things haven't come crashing down yet. I still have my job. Like the Canadian economy. Canada's unemployment rate isn't 10% and whatever. And so I'm just going to go buy a house at this point. Because what happens is that as that uncertainty continues, more and more buyers are waiting on the sideline, and then more and more listings start to pile up, and then you start to get deals, right? You get a buyer's market, which you're entering in a lot of markets in Canada right now, and then it starts to make sense. They're kind of just like, well, prices are down 5% since I originally made that commitment that I was going to wait to see if I lost my job at the steel factory. But now I'm just going to do it because there's no sense of waiting, and I kind of have a lot of that risk has dissipated as a result of the market giving me a better deal. So that's one way that uncertainty will solve itself. The other one is, I mean, we'll get an election. We'll probably get once you have a prime minister with a mandate, they're probably going to try and arrive at a deal with Donald Trump very quickly. And so I think that once we have a solution in that regard, probably be smooth sailing thereafter. Problem is we'll be in the summer market by the time that takes place, and so we won't see as much transaction as we typically will. But I would expect that by fall market, I think we'll have a pretty strong real estate market. I don't think we'll see spring market demand get pulled forward into the summer market like we did in 2020 when, April, like when kind of your peak spring market month was like lockdown, right? March, April. Um, I think that, I think a lot of the demand's just kind of been destroyed, not destroyed, but like really suppressed. It's not just getting pent up and potential to be pulled forward. This is actually where I put the article. I remember now. So would you support a party that proposes extending mortgage amortizations to 30 years or longer? A lot of people neutral, but a lot of people said they would be very likely to support that. It's sort of outside of the scope of, but I mean, I guess within OSFI, the Office of the Superintendent. Oh, maybe I didn't put it in here. Oh, there it is. So OSFI is kind of this is an article that you can read on REM, that OSFI is already considering getting rid of the stress test, because I think it's already served its purpose. And I don't think we're going to see a huge increase in rates. Like we're not in a rate environment where rates are like whatever zero, or 99 or 0.99 or 1.5% or whatever. Let's go back here. GST on construction, removal of GST on rental construction, pretty high degree of support from the real estate industry. No, very little support for rent rent control. So low likelihood. But the interesting part was there was a lot of neutral, and then there was actually like the third largest group of responses was very likely. So it's kind of a bit of a divided issue there. Um, would you? Oh, this is the stress test again. Sorry. Um, so okay, so this is kind of where you get to the challenges, like where things started to get a little bit more divided between Canadians. Sorry, just trying to stay hydrated here. Um, is you get a lot of people in Canadian elections where they feel like disenfranchised or like politically homeless, and this is one of those things where it's fascinating to see what's happening with Canadian polling right now. Um, in Canada, here's a couple of past elections. Um, in Denmark, only 1.5% of people didn't vote, right? Elected no one. In New Zealand, it was 5.5%. In Canada, it was 52%. Um, and we can see the makeup of this is from Angus Reid's. Like the majority of people feel like they're somewhere in the middle, or like slightly left wing or slightly right wing. Very few people feel like they're very right wing or very left wing. And so Canada's always been like a pretty politically centrist place. And this allows for like a lot of, call it, borrowing of ideas between parties. I mean, even right now, you see a couple of platforms that are not massive. I think, fortunately, I don't have to opine on things like crime and like, stuff like that because it's just like totally out of scope for me. But those really seem to be the only areas where they have like super big differences of opinion. Like, um, when it comes to like housing, infrastructure, spending, um, they all seem to be relatively aligned. So it makes it pretty easy to think about. But we have like this kind of what we've seen. This is probably not the best graphic for it, but um, this was an interesting poll from Polling Canada that the majority of people feel that Mark Carney is actually a very minor change or basically the same as Trudeau, and yet people are still going to or he still seems to be doing fairly well in the polls in spite of that. And I think a big reason for that is not actually as much about Mark Carney as it is what we're seeing happening um, in Canadian politics in general right now. And this is that, I mean, the Liberal Party has historically been a relatively centrist party, and in the last, well, the Trudeau Liberals have kind of really moved further left. Um, and what we've seen since, well, as soon as Pierre won, you started to see Trudeau start moving a little bit further right on things like immigration. There's a couple of different issues. They started to get a lot more serious on the housing file after that famous comment where it was like kind of outside of the purview of the federal government. And Mark Carney, from my perspective, is really a big step further in that direction. And I think most people would argue that, and that's where they've been able to pull a lot from, like kind of those undecided people in the center. And in last month's call, I'd kind of put a lot of information out about how a good portion of voters still had yet to decide what they were going to do on election day. Um, the the shift that we're seeing of the liberals right, regardless of whether or not, like I don't, I would actually say that this is kind of like politics aside. This is like a very economic thing as to why this is happening. I mean, the Liberal Party literally nominated a central banker to run, who's like characteristically very outside of what you would, typically see them doing to try and win this election. And they're actually getting, they're pulling most of, they took a little bit of votes from the conservatives at the beginning, it seemed, but they seem to be losing that actually. But they took a lot of votes from the party even further left of them, the NDP. And this part fascinates me because it really is a shift of the whole electorate right. Sorry. And so one of the things, this came from the Globe and Mail, but Canada is heading towards an election outcome not witnessed in generations, uh, with support for the Conservatives and the Liberals, when combined, likely to breach 80% of the vote in what it may consider the most consequential election of their lifetime. So 80% of the vote now exists in this new window, which is your center party that is now running on a more center right or PC platform, plus your conservative party. And to me, this is really interesting because if you look at your kind of your liberals and your conservatives, the liberals are really moving further in this right direction. And the reason that this takes place, this is a very, very predictable thing that happens historically. And you can see this, and we don't know whether or not, the LPC is actually going to, if they win, are going to honor their more rightist economic commitments. You'd probably have a better chance that if you want right wing economics, you're going to get those. You're more likely to get those from a conservative party. But what happens historically is you get this thing called the political business cycle. So there's two types of political business cycles. The first one is basically that politicians spend a bunch of money before they're like right before an election to try and get elected. We don't have that happening right now because Carney called an election right away. And Trudeau wasn't really spending a ton to try and get elected because he didn't think the election was for a while. He thought that he had a lot of time to hold on. But the other political business cycle is this ebb and flow that we see between inflation and deflation or disinflation. Um, and typically when your politics are more left, that creates inflation, right? That's a lot of spending, it's a lot of social programs, it's more taxation. And that's where, your leftist politics typically would believe that the government can contribute to the GDP through like modern monetary theory, where basically if you spend a bunch of money, you know, you build roads or bridges or whatever, all those construction workers now have more money and they're buying tools and they're going to buy sandwiches and whatever, and that money's just circulating in the economy and it's good for growth. And then eventually you tax it back out. That's kind of how that would work. The problem is there's an inflation that gets created along the way. What we're seeing now is people don't tolerate inflation anymore. They have a very low tolerance for inflation, and we're very sensitive to it as a populace right now. And so I think that both parties are really, they're running deficits, probably because they both anticipate a pretty bad recession in Canada in 2025. Probably in it right now, probably the first quarter of it right now, second quarter, and then we'll kind of have the official call that that we've got 2 quarters of GDP contraction. All of this to say that alone is going to do the disinflation work or the deflation work, and you'll likely see, like, I don't think you're going to see Pierre be able to do the cuts that they want to do. I don't think that you're going to see Carney even probably be able to do the cuts that they want, because he's proposing cuts as well, simply because I think the economy is going to be in too difficult of a position. And I think that we're actually going to have two parties that, even though the electorate kind of moved right, I actually think both of the parties are actually going to move left regardless of who wins, and actually try and be creating inflation after the election. And you see this already in Pierre's policy proposals, where they haven't taken a hard stance on immigration. Not that they have to. I'm just saying they haven't. It would have been probably more on brand for them to do it. And so I think that you're really seeing this like blending of those two parties where they're very similar right now. And so it really just becomes a character vote in a lot of cases. I think there are maybe some things that people would say outside of. I think maybe a big portion of it would also like the deciding factor. And again, this is stuff that's outside of my scope, but would be maybe like more of the ESG stuff, green energy, et cetera, with Carney being a little bit more on the green side and Pierre being a little bit more on the oil and gas side. And the easiest way to kind of see this is this political business cycle happening historically is if you just look at different prime ministries. So you can see during a conservative government, you see a trending down in inflation. During a liberal government, you see a trending up in inflation. During a conservative government, you see a trending down in inflation. There was a small period here where there's a little switch up where Pierre Elliott Trudeau left and then came back. But for the most part, I mean, the trend I would say is pretty clear that this political business cycle does exist. You get this area where there's a bunch of spending creates some inflation, people get pissed off, they can't afford anything, they vote that person out, and then we go through this period of destroying inflation, which is hard. It's really hard to be a politician during a period where you're destroying inflation, because that's disinflation, and that actually sucks more. Inflation's great until that one day that it's not, when you can't afford to buy a cucumber anymore. But for the whole time, on the way up, it's great. Everyone's making money on meme coins and buying real estate and flipping houses and whatever. And then one day it's just like the music stops. Disinflation and deflation they suck the whole time. Because typically if people think prices are going down, they stop buying stuff because they say, oh, why would I buy a TV now? And you've probably done this too, right? Like if you think, like I see it all the time. I'll go to the grocery store or I'll see like a TV on sale at Walmart and I'm like, I'm not going to buy that because it's on sale, because it's going to be they're going to, or they need to get rid of it, or it's going to be cheaper next time or whatever. And I noticed that as a consumer, I never really felt that way before. Before I would just buy something because I always felt it was going to be more expensive. And this is that chart ends at 2010. So I kind of just did the same thing during the Trudeau era, which you can see was again just a general path up in the inflation rate. So again, pretty simple historic pattern that takes place. That's an easy thing for you to see as why all of this is happening, why we're seeing the Liberal Party kind of being forced to move right if they want to have a chance at winning the election, why we're seeing Pierre's policies likely end up actually having to move left after the election. Another way of looking at this is just basically recessions, right? So, I mean, Stephen Harper was really well regarded as a very fiscally responsible prime minister, and I think a lot of people compared Trudeau to him in that regard. But during he ran a deficit, and during or during the recession, you can see there was a big jump up in spending. Obviously, nothing compares to this COVID related spending era of the Trudeau government, but I mean that one's it's always tough to beat somebody up too much about it, and I'm usually the first person to jump to try and beat up Justin Trudeau, but in this regard, it's like, I don't know what I would have done if, faced with that. And the US basically did the same thing. You can see a similar stuff per person federal spending. This was World War II, that big spike there, but typically a general uptrend. Government spending as a percentage of GDP on a general downtrend. So this is interesting, right? Because we think like, oh, our government spending is getting crazy. But it's actually been a general downtrend until about the beginning of that Trudeau area, where you started to see this uptrend. And then you did see a couple of those kind of spikes, like during, again, your 80s recession, your 90s recession, where the government really steps in, starts spending a lot of money to try and return some of those jobs, get people out working, creating make work projects, spending money on inflation, on infrastructure, because they have to. Otherwise, if 12 or 15% of your construction force is unemployed, people are going to be pissed off. They're going to start, do it. And now they'll just do it all online. But, before it would be, I think it would create problems, right? And so this is where I think my guess is that no matter who gets in, they're going to have to spend a ton of money on dealing with this recession. this is just from Bloomberg showing increases in spending on Carney's platform. Pierre's would be not super far below that though. Like I think I'd mentioned, I think Carney's is 130 billion in deficits over the period, and Pierre's is 100. I think it's 100 or 110. I can't remember off the top of my head. Um, this was an interesting note. I couldn't recreate this math, so this is my attempt to recreate this math. But this was posted by a liberal pundit here. I did a video on it on Instagram as well. But basically, I think that the 2025 pie is the increase in spending. So any new spending that's being added on top of their old budget is almost 65% on being spent on what they would call capital expenditures, or like capex, which would be investing in things that create assets. So it has to be like infrastructure, right? Which I would say that, like, again, politics aside, Carney's pretty uniquely qualified to invest money, allocate money in things like infrastructure, right? If we need like pipelines or roads or whatever, like he ran a company, one of the only companies in the world that invests in that privately, right? Like that's what Brookfield does. Is there potential for conflict of interest if Brookfield's going to be bidding on a bunch of these jobs? Sure, yeah, but the right and left seem to have completely flipped their policies on conflict of interest. Everyone on the right was like, yeah, we're cool with it in November for the Trump election, and now they're like, oh, now all of a sudden they're like, oh, we don't like it because the rich guy's on the other side, and now it's the opposite with the left, right? It was like, oh, you can't elect Trump because there's too much conflict of interest potential. It's like, but now we can tolerate a little bit of conflict of interest risk. So I just think that's funny to see the flip flop from both sides on their perspectives on the risk of crony capitalism. But basically, I think that the point of this whole thing is that it makes it look like 64% of the entire 2025 budget was going to come from capital expenditures, but that's not actually the case. It'd be about 25% based on my math. And this is your increase. So there's actually going to be a decrease in operating. I think that their decrease in operating was supposed to come from cuts to some of like the same things that Pierre was talking about. There's a lot of government waste that was visible by the existing, or I guess in previous administration. It seems like both candidates have an intention to cut some of that. So there could be um, some right sizing in like jobs, maybe not social programs, stuff like that. Probably elimination of waste. I think probably trying to avoid more like arrive cans and stuff like that would be another easy way. A little bit more on the foreign aid side as well. I think we're spending a lot of money in weird programs all over the world that, I mean, with this whole economic nationalism that's starting to happen, I think that's going to be less tolerated by the electorate over the next little bit. Um, Historically, deficit to GDP seems to not really matter based on which party is in. There was just that period, I guess. So this early 2000s would have been pre-Harper, and then you're kind of like, this was Harper's original surplus, and then the deficit after the '08 recession. But generally actually shrinking, and a lot of this is because our GDP has just been growing really well. Like, it's really easy to say that Canada's like debt is like so bad, and but a lot of it is like on the provinces, right? Ontario is like the most indebted sub-sovereign in the world. um Canada's like the way we're structured is almost more like Europe a little bit, and so a lot of our provinces can go and take their own debt. But our debt to GDP is actually not that bad compared to other countries in the G7. Not to say that like I want to see the government take on more debt, but I know that policymakers are going to use that to rationalize, oh, we have a little bit more room compared to Germany, or compared to, a lot of these G7 peers that we compare ourselves to, the US even. This is just the updated projected federal balance as a percentage of GDP, which does exceed what the federal government originally had said that they would be willing to do. And this is the projected federal debt levels as a percentage of GDP over time, if this is with Carney's platform. Some liberal pundits have sort of modeled this out originally, saying that the CPC platform would actually be more expensive on a debt to GDP ratio. But since this was before the costed platform came out, you can see that right now. So that was basically They used LPC, so the LPC actually costed out the CPC platform, so they used their numbers. But I actually just like went and found the guy's spreadsheet who did it, which was a great help. Did I get to post that one? I don't know. Thought I did. It's in there somewhere. I'll find it. But I did a version of this with the with a costed platform today, and the CPC line is actually below that PBO baseline. So again, I think you have candidates right now fighting. They're voting over things that, or sorry, they're fighting over things that matter to Canadians. Who's going to spend less money? Who's going to make the most sensible cuts? Who's going to be best for managing the economy? I mean, this is a good election. Like, democracy is working in such that they're actually fighting over things that are important to us, rather than like feel like the last couple of elections we didn't really have that. This is that comparison that I was mentioning about the net government debt to GDP. Canada actually has the lowest net. Gross I don't know, we're kind of in the middle of the pack between the UK and the US. But this is where we really shine. A lot of this is because, well, it's not because, but where we really stand out is Canada has the highest household debt levels as a share of GDP. So that's our mortgages, it's our lines of credit, it's our credit cards, etc. There we go. This is my updated chart. So this is the original chart that was shared. This is the one that I came up with after CPC costed their plan today, which shows that their debt to GDP is lower than the LPC's costed plan. The green line is the parliamentary budget officer's baseline. This one I'll just skip through because I think I'm a little bit long right now. Yeah. GDP per capita, I guess we can quickly do it. So Canadian GDP per capita has been pretty stagnant compared to the US, and this is actually like a much older chart. It's been falling pretty substantially since COVID. You can see it's still falling, and especially in categories like retail and accommodation and food services, both of which probably going to be pretty impacted by recession. And I mean, accommodation could I don't know if like this whole Made in Canada movement is like actually happening. I have talked to a lot of boomers who like are not doing Florida and selling their places and whatever. So maybe they're gonna just go. I don't know what they're gonna do in the winter, but if they're all gonna go to Canadian places, maybe we could benefit a little bit from that. Retail, you're starting to see it show up. I think like soft report. I mean, you saw Hudson's Bay. You're starting to see like I think softer reports from Canadian Tire, et cetera. Canadians are running out of money, right? So I'm gonna just quickly blow through the Bank of Canada's monetary policy report. Couple of interesting things here. Then these are the uncertainties that this is the way to quantify the uncertainties that we were talking about that we're dealing with in our industry when people don't want to buy houses. So why do people not want to buy houses? Well, they are more worried than almost ever that they're going to lose a job. Actually, I guess the probability of losing a job, that blue bar, is at its like the lowest that we've seen since at least 2015, right? So people are not super optimistic that they're gonna still have their jobs. And so why would you buy a house if you're fearful you're gonna lose your job, right? Similar thing, wage growth is not growing. Wage growth has really been one of the things that helps us get affordability over time. So if housing affordability has been improving actually in the last couple of years, very slowly, and a lot of it was done by interest rates. House prices came down a bit, interest rates came down a bit, but wages also grew. If wage growth stops, then that becomes a bit of a headwind for housing affordability, which could continue slowing house price growth. Um, Consumers are intending to reduce spending. This is obviously what we're seeing in people not wanting to buy houses. You can find this all on the Bank of Canada's website, by the way. Just search monetary policy report. The majority of consumers are expecting their financial health to worsen, increased likelihood of missing a debt payment, increased perception that the financial situation is currently deteriorating. This has been happening for a while, but basically people are not feeling financially secure. And so again, why would you go out and buy a house if you're doing that? This is probably the most interesting thing that I've observed in the Bank of Canada's most recent monetary policy report. And this is potentially a good thing for a lot of us. So inflation excluding shelter services has returned to its historical norm. But if you look at it, inflation including shelter services, or if you just look at the yellow line here, which is your shelter services inflation, they have shelter services inflation. So this is basically your well, you can see them here on the right hand side. Rent, which is the reddest line in this whole matrix here, and mortgage interest costs, which is the second reddest line, which red is bad, by the way. Um, they have mortgage interest costs is actually, you can see it's actually improving, right? It's fading down to like a pink over the last couple of quarters, but rent is still red, like red. And so the Bank of Canada is seeing rent inflation as high right now. I think most people in the real estate industry right now, if I ask them if rents are going up or down, they would say rents are going down. And data it would say the exact same thing. So rents have been falling now for 1, 2, 3, 4, 5, 6 quarters. Half a year we've seen rents falling. So at some point in the future, inflation, a lot of which is coming from shelter services and a lot of which is coming from rent and mortgage interest costs, is going to subside substantially as a result of that. Because the two things, number one is rents, and if rents are already down, the only reason it hasn't shown up in inflation yet is because we're not that 1 year period hasn't elapsed, because inflation measures the change in price from a point in time this time last year to this time this year. So if rents haven't fallen below what they were last year, then that hasn't showed up yet. I think they also use lagging data a little bit, because they use CMHC data, and CMHC is a lot more careful with their data. They do it on quarterly, whereas the chart I just showed you was from rentals.ca. I use rentals.ca and live.rent for like a lot of that analysis. But the other piece is the mortgage interest cost. We've heard about this mortgage renewal wall, right? 50% of mortgages, 40% of mortgages renewing this year, 30% next year, whatever it is. I think 60% of them are renewing at a higher rate, 40% are renewing at a lower rate, because you had all your people who took like 2 year, 3 year mortgages. Um, all of that to say, once we're past that renewal wall, that component of inflation starts to come down. The component of rent inflation is already coming down. And so shelter is going to be contributing a lot less to inflation. And this could actually be a positive thing for Canada in the fullness of time. And this could actually help create a path for interest rates to continue coming down. This is just your largest cities in Canada, where you can see how rents are performing on a city by city basis. And this is average change in annual asking rent. So a lot of these cities are actually seeing rents down. So that could potentially show up as deflation, right? Or like disinflation is when they're not inflating as fast. Deflation is when they're actually going down. So that will show up in the inflation eventually. Inflation has risen since late last year. A lot of this is probably interest rates coming down a bit. I think you've seen a lot of pulled forward demand from the trade war stuff. You've heard about like Apple buying taking a bunch of phones and airlifting them to the US so they don't have to pay tariffs on them. If businesses are pulling forward a bunch of their spending or buying a bunch of their goods to try and like keep them on shore to not have to pay tariffs, that's probably inflationary. This is from the IMF. This is interesting. Canada's actually seen the smallest change in import-export shares by destination. So, like if you look at change in export shares by destination, we really haven't changed our trade much. And change in import shares by origin, I think that the red line is just a reduction. Well, you can see, sorry, the red line is just a reduction here in the US, which is red. So we're importing less from the US as a result of this trade war. A lot of that probably also has to do with the Canadian dollar being really weak against the US dollar. And at a certain point, it's not just to say like, screw you. I think they're always going to make the business decision, and put feelings aside. But if Canada's currency is way weaker against the US dollar, there was a period of time when that was the case. Canadian dollar came down against the US dollar, but a lot of European currencies came down against the US dollar. And it just becomes cheaper for us to buy certain goods from Europe or Mexico than it does from the US. And that's something that we saw a lot of. The one interesting part about the Bank of Canada's monetary policy report, this is something I kind of put together. I literally went back and looked at, I don't know however many this is, a couple dozen monetary policy reports. This one had the fewest mentions of the word housing since COVID, when there was basically the lockdown, and I think they had a lot of other things to be talking about in the monetary policy report. So um, I it's arguable that the Bank of Canada is paying very little attention to the housing market right now. And it wouldn't surprise me if that was the case, to be honest with you. I think they're very focused on the trade war. I think they're very focused on uncertainty, which seems to be the biggest word, most common word in this monetary policy report. And so fortunately, housing's kind of trending in the direction that we all want it to, and they probably want it to. But it wouldn't surprise me if some like there could be some errors in judgment around the housing from both the fiscal side, the government, and the monetary side, because they've taken their eye off the ball on housing a little bit. I think that's it for today. Happy to do any questions. I see a bunch of stuff in the chat. I don't know if I need to.
No questions, just opinions.
I love this guy's opinions, so we can. Him and I should do a podcast together. Actually, Robert, we should chat sometime.
Yes, Robert is a very strong supporter of REM, so we appreciate him. I did see Irene put her hand up, but then I think she put it down or we lost her. But Irene, Dan's happy to take your question if you've got one. I think just back to our poll, Dan, what's stood out to me is, I mean, you mentioned what you mentioned about realtors from your view, typically only wanting prices to go up. Not a lot more level-headed than that.
It did surprise me for sure.
Yeah, and I've got notes. So then, like, the responses seem to favor a supply side strategy and financial flexibility over direct intervention and regulation. I think, I mean, the industry and the housing market's just so regulated. The majority of people want to see that red tape gone.
Yeah, I mean, it makes sense. Like, you know, the I think our industry has learned from the past couple of years of there being too much red tape and probably too much demand side as well, like non-permanent residents population growth that pushed housing prices up to the point where people couldn't afford it anymore. And when you see housing affordability get destroyed, then people stop buying. And so while maybe on the way up, we all thought it was a really good idea and it was a party that everyone was buying houses at these super low rates and stuff like that. Now that we're past it, it's I think we've realized, like, we've kind of like sobered up from this party, right? And it's like, let's not do that again. Let's not make house prices too unaffordable. Let's not put too much demand on. Let's really focus on figuring out the supply side. So there's more houses for us to sell, more houses for our clients to buy, etc.
Makes sense.
Yeah, 100%.
Okay, everyone, thank you for your time. Dan, thanks as always for putting that together. We're back next month.
Yeah, and we'll be done with the election, so we don't have to talk about that anymore, right?
Fantastic.
Yeah.
Have a good one.
Thanks, you too.